Aloha everyone, Joshua Hayes at BigWaveTrading.com. The overall status quo of this uptrend remains V-shaped moves, left and right, V-shape, V-shape, V-shape. Go straight down, go straight up, go straight down, go straight back up. But we're running into resistance here at the NASDAQ QQQ, so we'll see how we proceed from here. But overall, as you can see, we're still in a range-bound market. If the NASDAQ 100 breaks out above that red trend line, that model will switch to buy. But if you go look at the other indexes like the S&P 500, you can still see that it's range bound in between two different consolidation zones, and the Dow Jones Industrial Average is in the same situation in between two different consolidation zones. The Russell 2000 has broken out above its first consolidation zone, but still remains overall range bound. And why this is interesting here is because I'm back to basically nearly fully invested. I only have about 5% cash. I'm about 15% hedged in leveraged inverse ETFs, if I even have that. It's probably more likely around 10 to 15%. Cash on hand is anywhere from 5 to 10%, but I'm easily 80% plus invested on the long side, and that's interesting as we stay range bound. If this market was going to break down, I do not believe I would be getting all these long signals. My God, everyone, I wish I could get a perfect signal with just, a consolidation. Like, let's just look at some of the long signals tonight. Like, let's say that ACER, since right here through this consolidation, had green to max green bop the whole way. Let's say that there was no tall red bars and that, like, let's get rid of that red bar and that red bar, and let's say that everything else remained the same. Oh boy, I would love this setup. ATEC, same similar situation. Let's pretend like this is all green bop, no tall red bars in here and more big tall green bars. I would love this setup. STKS, same similar situation. Let's say that there's no red bop here, no tall red bars, and it's all green bop. I would really like this setup. And A-log, the other long signal, this is damn good, but it's an earnings winner. It's extended from its 10, 5, and 20-day moving average, so it's not a good setup. But this is what I kind of like to see here. There's no red bop here, but look at the volume bars. We got some tall red volume bars here. Not bad based on the price action. The bars are actually accumulation. If you go and you look at the weekly, you can see that that red bar came with a weekly reversal. That red bar comes with tight price action and a weekly reversal, and this red bar comes with just overall doing nothing. So it's not bad, but the thing is, where's all the big tall accumulation bars? Where's all the green bop? So I just do not have any great signals. But that being said, everything that I showed you tonight for me is good enough to take. I am only going to put about 1% of my capital in each of these trades. That's right. I'm still using my asset allocation model, just so you guys all know. I'm using the asset allocation model based on the last real downtrend we saw in the market. That was in 2016. I know that everybody thinks that most recent dip was a downtrend, but I'm sorry. Even though we did pull back 10%, it's not 20%. If we would have pulled back in just a couple of weeks, 20%, that's a bona fide crash, a bona fide correction that I can work with. But to just pull back 10% in a couple of weeks and then to reverse it right back in a V-shaped manner, that's not a real correction. It's just part of our overall uptrend that we've been in. The last real downtrend, as you can see, where we actually went below the 50 and 200-day moving averages for quite some period of time following the 2015 sell-off, was back here in 2016. I'm still using my account balance total asset allocation from there, which was right around the account that I'm using these trades for in Interactive Brokers. It was about a $400,000 account back then. It's well over $500,000 now, but I'm still using an asset allocation, the percentage-wise, with that old figure, and I will not reset to a new figure until we have a real correction where we trend below the 50 and 200-day moving averages. It looked like it was going to happen here at Brexit, but once again, those V-shaped recoveries, the V-shaped recovery post-election, the constant V-shaped recoveries in this shallow uptrend, and another V-shaped recovery just makes it difficult to really find great chart patterns out there. So with that being said, I know what I'm doing. The minimum trade that I take at 0.25% of my account capital, and I can get even down to 0.125% of my account capital if I wanted to, that would be $500. 0.25%, which is usually the smallest trade amount I take, That's still $1,000, $1 commission. My smallest trade this evening is going to be about $4,000 or $2,000, the STKS ad, and it's going to cost me $1 commission. I'm not putting $500,000 in STKS. I'm not putting $100,000 in ALOG. I'm not putting $200,000 in ACER. I'm putting $4,000 in ACER, $4,000 in ATEC, and $4,000 in ALOG, and I don't chase, and I always cut my losses. So nothing will get away from me. So while all these trades are overall risky based on liquidity, bid-ask spread, the price of the stock, the extension from the 50, 200, 20, 10-day moving average, for me, based on the way that I piecemeal trades and based on my account size and my cost of commissions, these all make sense. But for every new trader out there, you probably should only stick to this one long right here, ALOG. This is a CanSlim quality stock. It was on my new 52-week high scan on volume, and it was also in my price volume BOP surge scan. So ALOG, I'm going long, limit order, 94.15, only 1% of my account capital. Had it not been extended by 2 times from the 10 and 20-day moving average, this is a 4% long position. The first cut loss level for me is going to be right here, 90.10. My final cut loss level for now is 86.30. This level goes on heavier volume or it loses green BOP. This level will never come into play on that remaining half position. It will either be partialed up or moved completely up. Either way though, ALOG, 94.15, 90.10, 86.30. And don't forget, every trend following long that I take, I'm looking for a measured move similar to any part of the previous entire uptrend off the lows. So with the 37% gain in ALOG, even if the thing comes all the way down here, that's 10%. It will never be that total amount, but I'm still looking at over a 4-to-1 reward risk ratio. And if you just use the first stop, you're looking at over a 6 to 7 to 1 reward risk ratio. That's worth it for me. So ALOG, that'll be a new long. That came from my CanSlim scan. Then I have ACER and ATEC, excuse me. ATEC and ACER both come from my perfect speculator scans. So ignore that white dot. I added them to my my current holdings track list already. But ACER, because it's over $10, this would normally be a 2% position for it being in the perfect speculator scan. But since it's thin, I'm going to reduce it a little bit. It's above 10, but not above 20. Normally the above 20 stocks are the ones where I'll go ahead and do 2% if they're thin. Since it's in between $10 and $20 per share and it's thin, I'm just going to allocate 1.5% of my account capital, and I'm going to err to the downside towards the 1% of my account capital. Got to see what the total shares are, but no matter what, it would be an even number. So if I have, like, let's say 90, the total share amount is going to be 96. I'm going to drop it down to 90 and not move it up to 100. So I'll err on the downside instead of the upside with these longs. But ACER, want to get long, limit order 1856. First cut loss level 1709. Final cut loss level 1616. If you're a new trader, if you're not a profitable trader just yet, ignore, avoid, watch, learn how I trade that one. ATEC, exact same situation as ACER, perfect speculator, but this one's sub 10, so it's only 1% of my account capital. No chasing to the high of the day, only want to use 348. First cut loss right below there. Oh, that thing is messing me up. 309, final cut loss right here, 3. New traders, avoid, watch, observe, do not take. It's under $10 per share. That automatically makes it riskier. I haven't checked the bid-ask spread. Liquidity's decent. It's not great, as you can see by the volatile intraday price action, and that's just it. It's a volatile overall stock, so it's not safe. So new traders, just watch. STKS, this is an ad signal, but really for me, it's a buyback / ad signal, as I never got my initial position here, as it gapped away from me and never touched that low here at 236, came close to 237, but I never got a position. So STKS, this is an ad buyback. Way too illiquid, way too volatile intraday. and also extended from the 20-day moving average. This is a trade that not one single person watching this video lesson or reading my new positions page should make. This is just a trade I'm going to take. 0.5% of my account capital, limit order 258, first cut loss level 248, second cut loss level for me 239, final cut loss level 235 for me. I'm not going to let it get down into this yellow and red area following that initial accumulation. This thing needs to pop and go now, or else I'm going to get out. But that'll do it for the long signals. Really quick, just want to run over the sell signals. UBR is a 50% sell signal, closing below its 20-day moving average on above average volume. That's a negative 3% loss to me. VKTX is closing below its 20-day moving average on above average volume and below its 228 low a day. So that's going to be a 20% gain on an end-of-day basis. I'll be moving half of my remaining stops to this low a day right here. Same thing with UBR. Half of what I have remaining goes here, and then I'll partial here, here, and here on the rest of the stops. If it loses green bop tomorrow, all of these stops get moved to this low if that low does not get taken out. If this low gets taken out, these stops get moved up to whatever the new low is. And then full sell signals, DL, immediate failure. That's the long signal on the speculative side, not posted in the quality positions page, and this is why. Boom! Works immediately. But it's speculative, so boom! Fails right the very next day. And that's trading, everybody. So welcome to our markets. They're so exciting. But DL, that's a fail. I still have stops on the book from here and here. They all get moved up to today's low a day. And then XOMA, the new long position was here. So 95% gain. The add signal was here. 98% gain, but Zoma is a full sell. 1, 2, 3 series of lower highs, 1, 2, 3 series of lower lows. Confirmation close below the 50-day moving average and the first nasty red bar day on above average volume below the 50-day moving average. Full sell signals. So Zoma is producing multiple full sell signals, leaving no questions about that full sell signal, even though the stock still has a 95% gain. You could use your 200-day moving average as your final line in the sand, but if you still have any shares left, I do not. I moved all of my stops to 1 cent below that low a day, so I've been completely knocked out. But if you want to really go ahead and give it some room, you could use a 200-day moving average, but I'm all out. All right, everyone, I'm going to go and wrap it up there. It's getting kind of long. I'll see you in the chat room during the pre-market on Friday. Aloha.